Happy Saturday, ladies and gentlemen, Allincrypto here, and welcome back, guys, what is going to be nothing short of another jam-packed daily market update. And as always, if you are new around here and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one every single day around 1 PM UK time to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. That's exactly what we're going to be doing in this market update. We are going to be starting with some breaking news over the past 24 hours. As we see, 21Shares, Cathie Wood's 21Shares, now filing with the SEC for an XRP spot ETF. We have Canary Finance or Canary Funds that have done this. We have Grayscale that have done this, and also Bitwise. And now 21Shares entering the race. It's likely because they know what is to come. We're going to be starting off there. We've got some news from UBS, one of the largest banks in the world, actually now looking to leverage and use Ethereum. This is interesting, and we'll discuss the broader ramifications of this and what they're doing. They're, of course, tokenizing treasuries. And earlier this week, and we'll go back to it, we looked at a report that was published by the US Treasury, arguably one of the most powerful organizations in the world at the helm of the current monetary system. They published a report, and within that report, on page 100, and I think it was 11, I stand corrected, 106, where they talk about digital assets and the treasury markets. Very interesting. We'll hear some news from Paul Grewal, who, of course, is the chief legal officer over at Coinbase, and then we'll dive into a little bit of price action. I think there's a lot of sort of doom and gloom in the cryptocurrency space, but the important thing for us is the key event of Bitcoin having now broken out of this sort of resistance that it was held under, ultimately completing what we believe is just a pullback in a broader uptrend. But we will discuss that all towards the end of the video. We might even go a little bit into the debt markets. We're seeing a very strong Dixie, and this is largely on the back end of the 10-year yield, as people no longer... There's not that appetite for the debt markets, which underpin the entire financial system. But I'll talk in greater detail about that potentially at a later date. But let's start things off. Yesterday, on the 1st of November, happy 1st of November for those of you that I didn't get to see yesterday. We did release a daily market update slightly later than normal. We have the filing of 21Shares for a XRP spot ETF. And this, of course, is with the United States Securities and Exchange Commission. I think it was yesterday, actually, the SEC actually charged IMX or brought a lawsuit against IMX, Immutable X, a gaming platform that I'm personally a fan of. I think it's going to do quite well. I think gaming's a massive narrative, and it's really still yet to sort of explode. However, I think that more broadly is just a last land grab for them. With the coming election, which the markets are very anxious about, we can talk about the sort of bond markets, the largest markets, towards the end of the video. People just want to get this over and done with. And I think the SEC is just sort of grabbing as much as possible, because the ultimate reality is, whether it's Harris or Trump that win, Gary's out the door. Whether that's a promotion for him, likely on the back end of Harris, or whether that's a redundancy package on the like of Trump winning. So this is big news. Brad Garlinghouse, of course, chiming in on this. The message from the market is clear. Institutional interest in XRP products is stronger than ever. Bitwise, Canary Funds, and 21Shares just this morning filed S1 for an XRP ETF, while Grayscale launched XRP Trust and filed to convert its multi-asset fund, which includes XRP, into an ETF. We spoke, and we did a long video, actually, where we spoke about Grayscale Digital Large Cap Fund. I'm one of the only people I've seen that's actually even looked at these products and used them as a broader barometer for how the cryptocurrency space is going to do. If you've got a digital large cap fund offered by Grayscale that at one point, I mean, it was giving us way more than a 10x to this target from when we started to look at it, but certainly from the low of this right shoulder would have been a 10x. What's the altcoin market going to do under that context? And this breaking out and triggering that power is all perfectly in line with Bitcoin and what it's currently doing. Anyway, I digress. The SEC's war on crypto has lost battle after battle. Their continued disregard for the country's authority will further erode the SEC's credibility and reputation. And actually, rather interestingly, if you look at, there was a survey done, was it Ernst & Young's? I can't remember the arm. It begins with a P. They did a survey, an institutional survey, and actually, if you look at the fourth largest holding by institutions, it goes Bitcoin, Ethereum, Sol, and then actually XRP. So there is clearly that demand. We're likely going to see that continue. We're likely going to see, in my opinion, in 2025, a tsunami of altcoin ETFs launched, including some of the ones that have currently or have been filed for. Remember, Canary Funds also went down the path of HBAR as well, looking to enable that, which is great to see. We'll do a lot more videos on HBAR. The morale is awful. And as the Lord Commander of the HBAR army, we've got to start to pull ranks. Moving on, digressing. Breaking: UBS, one of the largest Swiss banks, largest banks in the world, actually more broadly, is tokenizing treasuries on Ethereum. Now, Ethereum isn't an obvious one to do it on, in my opinion. But as the space matures, as there's more kind of education around it, I think most people will not be choosing Ethereum to do the tokenization on because it doesn't make that much sense. But today, the $1.7 trillion bank launched the UBS USD Money Market Investment Fund, UMINT for short. We have seen growing investor appetite for tokenized financial assets across asset classes. And tokenized treasuries, what's really going on here is they're kind of, it's kind of like snuggling up to the biggest bully in the room, if that makes sense, with the treasuries. Because right now, and this is why we're seeing what we're seeing with yields and thus dollar strength. I don't really want to get into that in this video because it's kind of like macro in a little bit more. Needs a lot more explaining. I don't want this to be a sort of 30-minute video. But right now there is a kind of lack of appetite for government-backed bonds, which underpin the entire financial systems and economies of the world. One way, and we saw the Treasury, the US Treasury, this is a report directly from them, that they might be able to stave this off, is with the essentially the facilitation of US Treasury-backed stablecoins. And actually these are very interesting because what they kind of do in one regard is they kind of liquefy the debt. So that debt, money comes into existence. There's an unimaginable amount of it right now, although it's very imaginable because we're living it. Whenever money comes into existence, it's borrowed. When you take out a mortgage, there's money creation going on there in the form of you're given money to go and purchase the house. Somebody gets that seller, and then there's a liability that's usually held on the bank's balance sheet that you have to pay back. So it's a two-part accounting system, and right now the debt is largely going unwanted. Again, I alluded to it. This is why we're seeing 10-year US bond yield spike, and also the dollar, which is very correlated because of the uncertainty around this. But this is huge, and this is going to be something that we're going to see more continuation of. I actually believe, and I'm going to do a video on it later on, linking this to XRP, that the United States is going to embrace Ripple as a company and ultimately turn it into a unicorn like Amazon, Facebook, and some of these other tech giants, because it really is a tech company and that essentially help the US be the powerhouse that it is. But this is very interesting. They're doing this on Ethereum, which is really interesting. And ultimately the entire world is moving towards this, and the treasury market is one of the largest in the world. Everything will be tokenized, ladies and gentlemen, and we're on the cusp of that. I think even though there's a lot of fatigue in the cryptocurrency space, now is really the most exciting time, I think, ever to be a part of it. There was some news from Paul Grewal that will fly over very quickly in regards to them suing the FDIC, which is the official Twitter channel for the Federal Deposit Insurance Corporation. Slowly but surely, the picture is becoming clearer. After we sued, FDIC finally started giving us information related to our FOIA, Freedom of Information request, by the way, for anybody that's unfamiliar with that abbreviation, about the pause letters it sent to financial institutions as part of Operation Chokepoint 2.0. We've covered this previously. In short, the contents are a shameful example of government agencies trying to cut financial access to law-abiding American companies. So far, we've uncovered more than 20 examples of the FDIC telling banks to pause or refrain from providing or not processing with offering crypto banking services. The public deserves transparency, not an agency that's working behind a bureaucratic curtain. We will have full letters. And I personally, as a business owner, if you have anything to do with crypto in the UK, good luck getting banking. In fact, it's going to cost you a lot of money. And everybody I know that's in crypto right now that was in the UK has left. They've gone to Dubai predominantly, or they've gone for, elsewhere, into Asia more broadly. because the UK is just not accommodating. And what we saw with their bill was more persecution for certainly entrepreneurs. I mean, farmers got absolutely... It's just unbelievable what's going on broadly. But let's keep off the topic of politics. So, interesting news in regards to Operation Choke 2.0. There's always things... Every day we do one of these updates and we bring you new and exciting news as it relates to the space. There will be a catching up of all of this kind of groundwork in relation to the price and the representation of it through price. Let's close things up now, guys. I'd love to leave you to your Saturdays on some sort of Bitcoin or more broad crypto space analysis. Stick to the plan. Believe in the process. We've been exceptionally right on Bitcoin's direction. I wish I was all in Bitcoin back at 16K, although I chose the altcoin path, the path of the most resistance, I think we can all safely say. However, our bet has always been, that altcoins will outperform Bitcoin eventually, and I do think that day is still to come. Some people don't believe it at this stage, but it's always the case, certainly given around about where we are. If you look at Bitcoin dominance, how long that typically takes to roll, whether that's post-halving or just in general, in its sort of own cycles, we're right. There's no difference, in fact, to what we've seen in other cycles. But we've got a lot of confluence in regards to the direction that Bitcoin's heading. And this is a key event of a breaking out of what is resistance that you've currently been pinned under, forming this broadening channel that you've ultimately now, in my opinion, sort of cleared, and you're now on that sort of doorstep or the first step of what is going to be a broader uptrend, likely taking you to 130, around about 150K. And there's a number of patterns that see you get there, and there's a lot of confluence to that. We did look at this smaller pattern that ultimately triggered, and it's very much progress that takes you to the sort of 84K range. I think with the markets broadly, and I'm expecting them to absolutely rip, largely regardless of who wins the election, but once that election kind of sigh of relief has been breathed, I think markets have got an amazing time ahead of them. I truly, truly, truly do believe that. It's ultimately just a case about getting over that hump. And when you look at the sort of broader technical trajectory for Bitcoin and the crypto space more broadly, it's not just Bitcoin that broke out of its channel. It's the likes of Total 2. You can see this is a breakout. It's now consolidating, actually in a rather interesting manner. You might want to get some sort of a breakout of this. And ultimately, I think this is all going to come on the back end of a kind of election win, or the elections being over. So more broader technically, the markets are in good standing. We are competing with a little bit of dollar strength right now. Remember the dollar weakness, which is ultimately inversely correlated with Bitcoin and global liquidity, should come off in our opinion. But this strength, I think, is largely on the back end of the yield market. This is 10-year yields in the Japanese candlesticks and the Dixie in this sort of pinky color. This is on the back end of the debt markets, largely. Debt markets don't look too hot right now, and the question is what's going to happen with them. I ultimately think governments step back in and go back to that sort of quantitative tightening regime in order to support what is now a colossal debt burden in the form of public debt, and also government current expenditure in regards to interest payment. Look at this. This is parallel. But there's a lot going on. There's an entire monetary system shift and regime change coming. Guys, that is it from me. I'm going to love and leave you on that note. If you've enjoyed the content, like is always appreciated. So is a comment. And I'll see you all in tomorrow's daily market update. Thanks for watching, guys. See you in the next one.